Today is May 31st, 2025. Call it a bear market rally testing key structural resistance with a plethora of major reactionary highs and lows across that entire span of time in confluence of its 50-day moving average. Call it a duo price resistance level. And crude oil is attempting to rebound from its sharp correction here, consolidating just beneath a key descending trend line anchored from the 77-ish handle. And the price is compressing between the $60 handle and the 64 big time, call it multi-year price resistance. And that is a big key pivotal inflection point that long traders and or bull traders and short sellers will respect heavily. And we pop that level that would engage into some health being spurred into some of these key technical momentum indicators, with the relative strength index printing below the 50 handle. There is no real momentum yet, but this is a pause zone. So no strength confirmation yet. You have the moving average convergence flatlining with a histogram barely positive. Zoom in for that feature, but it is barely positive and a huge inflection point for the signal line. Watch for a bearish crossover or an inversion, where this could be the beginning stages of a retest of its zero line threshold. If the bearish crossover is averted, there are mixed signals within this, with a slightly bearish tilt within these, still unresolved, but with no aggressive upside impulse yet. That level's taken out, called that dual price resistance level, that could increase the odds of a potential move to spur health back into these indicators. You do have exaggerated positive divergence on a near-term basis, which could increase the odds for a higher move to come. This is not a breakout yet, but it is in test mode right here. And I believe here on the daily interval, the clear continuation trade, the structure is bear biased until this trend line is invalidated alongside the 50-day moving average. And only a strong reclaim of the 64,786.59 handle would convert this into a real reversal. Until then, this is not a breakout, it's a battlefield. And zooming into the 60, we are within a compression range with a reversal potentially forming. You have a falling wedge inside a massive horizontal range here. This is your 60 handle. This could be an aggressive long trade setup. Watch for a breakout above the 61.10 handle to usher in an additional stops down below the 60 price range. The bullish hammer printed just above the 60 handle, which perfectly aligns with the range floor support level. The price is now testing its wedge resistance level with a small breakout attempt underway, but not confirmed yet. Long traders, bull traders, they want to see a solidified breakout candle close up above to usher in a risk reward ratio targeting the 62.40 handle, ultimately back to the top of the range at the 63.80 handle. And then in confluence of the daily intervals, big multi-year price resistance level, what I believe the floodgates will open for the streets of Spain, across breaking out above that inflection point, only ushering in and taking out the descending trend line on the daily with multi-year price resistance. That could be the beginning stages of a potential spring and reclaim scenario common in accumulation phases. And I believe with the compression and the coil that has been going on here for months on end, would only validate a very powerful move to the upside if taken out. Indicators down below suggest a short-term bullish reversal, but confirmation awaits a breakout and the follow-through. You have a nice clean divergent low here with bullish and positive divergences in multiple indicators, only increasing the odds that the descending structure formed at a low of a broad range, only increasing the odds on a high risk reward potential on a breakout. This is excellent structure backed by key support with upside tailwinds from broader oil positioning. I believe the floor is sacred here for the indicators at the 60 handle. And if we lose it, oil could plunge into the air here. Hold it, and we may watch a slingshot move back to range highs.